Good afternoon, everyone. Thank you so much for joining us. We're just going to give it a few moments while we let everybody come in. But this is a Victory Squares webinar, and we're going to break down the NAV for you and also go over some future catalysts with CEO Shafin Diamond-Tijani. So just give us a few moments while we wait for everyone to come in. Again, this webinar will be recorded. So if you have to leave for any reason, don't worry. We'll try and get that out to you as soon as possible. And remember, if you have any questions, please put them in that Q&A section down below for you. We'll try to get to as many as we can. We did have quite a bit emailed in too, so we're trying to get through all the questions we can. But again, if we don't get to yours, feel free to send an email to ir@victorysquare.com and we'll get to them there as well. So we'll just give it about another minute for everyone else, and then we'll begin. And just a reminder to take a look at our forward-looking statements as well on SEDAR and also on our website. You can find them there.
Thanks, Abby. Before we get started, I know we're waiting for some people to tune in, but anyone that's a Jays fan, I'm so excited. What a game last night. Yeah, so sorry if you're a Yankees fan, but just diehard Jays fan since I've been a kid. And I think the last time we won a playoff series was 2015 or 2016. So very exciting for all of us Canadians.
And I think I'll pass it over to you, Chef. We can begin, and anyone else joining can just come on in.
Perfect. Hey, everyone, thanks for joining today. As most of you know, I'm Shafin Diamond, the CEO of Victory Square Technologies, and really appreciate everyone spending their time with us today. Apologies, I know the webinar was originally scheduled for last week, but I had a travel conflict, so I appreciate everyone accommodating us. At Victory Square, our mission is simple but powerful: to make early stage investing accessible to everyone. When you buy a share of VST, you're not betting on one startup. You're owning a curated portfolio of next generation companies across digital health, AI, climate, gaming, Web3, inside one public audited liquid vehicle. We've described it as venture capital for the public markets. The same early stage access that only used to belong to institutions now is open to all investors. Before we dive into the NAV, I want to give you just a quick snapshot for anyone that's new, some highlights of VST. VST currently has around 25 plus portfolio companies across multiple high growth sectors. Our NAV, as you'll see, is currently approximately about 170 million Canadian, which is up from around 4 million in 2017. So we've had about 4,000% growth over that period. Our current market cap was around 84 million Canadian dollars, meaning that we trade at approximately a 50% discount to our NAV. For those of you that have followed the story, that discount was even more significant a couple of months earlier, but it started to catch up. We have no debt on VST's balance sheet. Because we consolidate Hydrate's financials within ours, you'll see around 17.5 million in consolidated cash, plus over approximately 120 million in public equities, if we wanted to monetize, if we ever needed or required capital. In short, we have a very strong balance sheet. There's no leverage, and there's plenty of optionality. Insiders and management own approximately 20% of the company, so we're fully aligned with shareholders. When we win, you win, same shares, same returns. So from a retailer's, from an investor's view, that's rare. We've got real assets, real growth, and real skin in the game. Before I open up the NAV doc, I just want to kind of explain what NAV means and how we measure performance at VST. NAV stands for net asset value. It's the heartbeat of Victory Square. It's how we measure what we've built and how efficiently we're compounding capital. At Victory Square, we track 5 key metrics. So cash invested, NAV, return on invested cash, share price market cap versus an index benchmark, and operating costs as a percentage of NAV. Since 2017, we've reviewed over 1,000 startups and ideas, and only 25 have kind of made the cut. We've invested roughly approximately 13 million in total, and today, as I mentioned, the portfolio is currently worth around 170 million. We update our NAV regularly, usually quarterly, using independent third-party pricing agencies, audited financials, and real market data. So there's no guesswork, no hype. There's independent valuation, some transparent disclosure, and disciplined growth. So let me pull up the NAV document here. Give me a second here. So I'm gonna just share. Can everyone see my screen? Okay, perfect. So, second. Okay, perfect. Thank you. So, so let's start with our public holdings. So this NAV is as at the end of trading day on October 8th. We're broken into three categories: public companies, private companies, and companies that we're incubating. So I'll walk through these. Um, so when you look at our current portfolio companies that are public, you'll see the name of the companies, the ticker, the industry, the, sh the share price at the end of close of yesterday's market. What the NAV is, so that's what the value is on VST's balance sheet, and the valuation method. That total amount is roughly around 120 million Canadian. As you'll see, the majority of that sits within Hydrate. So Hydrate represents a significant amount of that, which is, approximately 111 million. So those are our publicly traded holdings. Obviously, our focus within that public holding group is Hydrate. You'll see other names on there like Edge Total Intelligence, which the shares are currently valued around 3.5 million. Again, this is as of the end of trading day yesterday. Uh, that holdings came about by us selling an asset, which really had zero value in our books last year to Edge, and Edge was able to use that IP integrated into what they were building, raise capital, and if anyone's followed the story, they've got a lot of momentum there. Stardust Solar is another one of the public companies that we own equity in. Our value is currently around 520 grand today. Stardust was an investment we made using VST shares in 2021, I think. And I think we valued our VST shares at that time around 89 cents. XR Immersive Technologies is currently halted. It's a large holding of VSTs. There's really good IP in there, and we're currently working with that company to get their financials up to date and back trading. And there's a lot of value that we feel there. Fans Unite is currently we've just marked it at zero, but we do own equity in a shell, and that shell still does have assets, including equity holdings in Better, which is a gambling product in the US, and some other IP. Anon, again, small holding, worth 105 grand. Game On, which is one of we've just marked it at the last trade, which the company has been halted, and it's been basically kind of stalled and flat since then. Turnium is another portfolio company that's been in the VST since 2018, I believe. It's not a core holding, but we own shares in that. And then Covalent, which the ticker is CXT. It's a Web3 product. We still own tokens in Covalent. In most of these cases where we mentioned Covalent or Fans Unite, we've done really well in that VST's had liquidity on the past on those businesses, and we just still hold equity in both. So now I want to shift to the private companies that we have. So these are private companies that have been in the portfolio. They could have been in the portfolio since, I would say, 2017, 2018. A variety of different sectors. So VST, most of you have heard about it. If most of you investors that are new to the story have probably come to VST as a result of learning about Hydrate and what we've been doing in the digital health space, which is a core space of ours. However, you'll see that we are kind of sector agnostic, and we have IP in a number of different other other categories. So, such as Copilot AI. Copilot's been in the portfolio since I think uh, 2018. It was an investment. Our investment cost was maybe 1.2 million in it. It's obviously increased significantly. It's a private company. They do over 10 million in ARR. They're in the sales automation, AI, and ML space. Um, uh, it's again core holding in our that's a core holding in our portfolio. We also own a board sheet. VS Digital Health is something that's been in VST for a while. It's where we've built a number of different types of IP in the health space, in the digital health space. Uh, where most people will VSDH stands for Victory Square Digital Health. Most are probably familiar with VSDH1, which is IP that is in Hydrate, which is really powered Hydrate's third vertical. Uh, Victory Square Digital Health has a 10% royalty in there as well. So that valuation that we have, we think will re-rate at the end of this year, given what we determine that royalty equals into that flows back into VS Digital Health. There's also other IP in VSDH as well, around online pharmacy and diagnostic testing. Some of that IP we've been able to use in some of the incubated categories. So when you look at the incubated category, there's IP that we're always building off of in different verticals we're in, where we feel like we have distribution already, or there's a pain point within one of our ecosystems, so that when we build, we know that there's a greater chance of success. Then you'll see names like Blockchain Assembly, which is been in there. It's a Web3 business of ours, which is really kind of like an IP play where we're sitting on a bunch of tech and IP in that Web3 sector that has a multitude of purposes. As an example, the IP that we sold to Edge Total Intelligence last year for 1.7 million, which is now worth, I think over three. That was IP that was sitting in part of that IP was sitting in Blockchain Assembly, as well as two other pieces of IP that I'll get to in the incubation stage, which were also pieces of IP that were taken from that have been sold, that will give VST equity in other IP that's being spun out. We don't have a lot of focus in that category anymore. So generally, because we have knowledge and really good IP, we'll build stuff in there that we can sell, because our core focus right now is on healthcare, just given how well Hydrate's doing and Insu, and now we have Possible in that category. So you'll see Insu Therapeutics. Again, this was something that was incubated from scratch, something that I'd kind of worked on the side with here in Vancouver, British Columbia, with the UBC around patent oral delivery of insulin and other injectables. So Insu is been gaining a lot of traction recently. They had a financing done, and there's another financing transaction in the works. And so we used that term sheet to to place a value on what our equity in that is worth. And then going down that category, you'll see Victory Square Health and Tests, which are both businesses we have focused in South America. Both are in Brazil, and we've talked about them in the past. Both of them really revolve around a similar type of business to what VSDH does and what Hydrate does, but in Brazil, and the focus of Spanish-speaking South America, Spanish-speaking South America as well. Again, healthcare is universal. It translates into every geography, and there's similar pain points that you see. And so there are Miltest is specifically on the at-home care testing side of the business, whereas Victory Square Health is is working with bricks and mortar pharmacies and clinics within that region. It's something we haven't talked a lot about, but I think in 2026 you'll hear more from that category, as you know there is a lot of momentum that's been happening over there. It's interesting because we're able to build IP here in North America, um, release the IP into market via, let's call it a hydrate, and get really good, feedback and pain points back that we can then take that and then just launch it into a new market, which is again one of the great benefits of VST is within all of these portfolio companies. A lot of these founders are able to utilize shared services, best practices within the rest of the portfolio. So I feel like it gives our companies an unfair advantage. You'll see cloud advisors, again, it's an insurance tech, valued at around $500,000. Again, this was, third-party pricing agency that came in and evaluated that. Creator X was a platform that was built in the creator economy, really allowing creators to monetize their fans uh, by issuing their own kind of creator-led and based token and being able to reward their fans for engagement with that token. Again, it's a platform that's there. Again, we haven't really been focused too much on that Web3 side. And then you'll see again, Kin Bioscience is in the plant-based space. Metaspectral is computer vision, AI, ML. We have a very small equity in that. This was a group of two founders that started in the VST office, and we loved what they were doing. It wasn't really a core focus at that time, so we didn't invest deeper. But that company is doing some pretty extraordinary things. Their tech's being applied into the defense category. As a whole, you're looking at that. That category being worth around 37 and a half, let's say 38 million Canadian dollars. One note, our cash investment, so our investment into that category as a whole has only been around 2 or 3 million in that. And so we feel that this value of that portfolio as a whole, the private holdings, not all will succeed. Some will stay flat, some will fizzle out. This is the reality of it. But what we do know is that there is the core of something in there to emerge and be have the opportunity to be an outlier as well. And when we look at that, for me, just if I had to, to off the cusp look, something like an Insu Therapeutics or Copilot AI have that type of appeal. VSD Digital Health, I don't share. I mean, I think there's mass potential, but I don't look at that as an outlier because again, it's really an engine that powers what would be outliers in our portfolio, such as Hydrate. The bottom, I want to mention one other thing too in this category. So when you look at valuations, so if you look at Next Decentrum and you look at Creator X, for example, these were actually valued higher. We as a management reviewed and put the valuations down because we're not involved in those businesses right now, and we believe that they're flat. So even though that they've been valued higher, we've tagged the valuation down of for those. I want to just mention one other thing too is when we look at this, is an internal guide for us, and so we try to be conservative within an internal guide. We don't want to be overtly optimistic within that because it could skew our, how we allocate our time and resources. So for us, just to know, it's very important that we're not just throwing numbers in here. There's either a term sheet, a third-party evaluation, or when management's reviewing it, we also hold sometimes a a more strict and disciplined approach when we're looking at these companies. If we are not actively involved in those two cases, like Nexus, Centrum, and Creator, we've smashed the value down internally for us, which just helps us know that okay, we shouldn't be focusing time and resources on that on those assets right now. The last category, which is residual IP and other holdings. This is an important category because this will change constantly. So I want to spend some time here just sharing some of them. So uh Plausible, I'll start with Plausible because it's one that there was a really good news announcement today, which if you haven't read it, I think Alex might have shared it on our Discord channel, but they just announced their $10 million seed fund focused in the animal health category. With Possible, there's two parts that VST is involved in. There's Possible, the VC arm, which that capital gets deployed, and there's equity there for VST, and there's also carry there, which means that in addition to the equity, the fund's performance, if it performs above a certain level, after returning capital to shareholders, there's an additional carry there for both VST and Alex for performance. But when we look at the fund idea, the real key there is that's not something that, it's a long-term, we're making long-term investments on companies in the animal health that we want to build and create value of. An interesting thing there for VST is that there's also Possible Studios. So VST's background has been the ability to incubate. So we have the ability to partner up with incubators around the world, find really good IP, bring it to Canada, for example, to build using the startup visa program, leverage all the tax credits and benefits that exist, which we feel are like non-dilutive, advantages for us. Um, and then be able to market, globally to to more North American markets and to global markets. And so we also have a studio aspect there where we're able to build IP, bring IP in, and have the VC fund invest into those businesses or incubate them from scratch, which, from a VST perspective, allows us to double dip, right? So we want to make sure that, everything we're doing, there's, additional value add to VST, whether it be in the case of Hydrate, the royalty, which is an additional kicker that we get. So we're always trying to make sure that VST and our shareholders are, have the maximum benefit. So you'll see the Possible VC value based on the last transaction. Now the studio value, we've just placed a value of $1 million, which is, sometimes we'll, even though when you look at a startup, sometimes a startup with an idea, team, and a product might have a pre-money value of 4 or 5, $6 million. We've just taken a very nominal value of $1 million, and that doesn't really encapsulate it's in the studio, because there are three different um, items that we've built in the studio, in the Possible Studios already, that each on their own would have a value considerably higher than that. But for us, that's the value we place. Um, Hyper trust. So this is going to be really exciting. So I mentioned earlier, VST has been in the Web3 space since like 2013, 2014. So we've been early in that category. Hyper trust is a treasury business focused on hyperliquid. Um, I'll share more information on a news release to go deeper into that. But where I want to highlight that is that we're going to be doing a plan of arrangement. So for VST shareholders that have been clamoring for a dividend, um, we're going to be doing a plan of arrangement which will dividend shares out to VST shareholders, as part of that listing directly. So there's an amazing group behind that. Um, they've raised considerable capital. It's in a really Hyperliquid for me is a really exciting chain. I'll also share some info on why I'm very, very bullish not on that category. But um, again, like a lot of you may not even heard of that, but this is just the idea of things that are sitting there that have value, not just from a valuation perspective to VST's NAV, but the fact that there's a plan of arrangement and shares will be dividend out to VST shareholders. Yocal.ai, that's in the health tech, again, AI, SMB productivity space. Um, VST received its equity in that project via an asset sale. So we had an asset around the payment space and some AI automation tools that we had that, again, sitting on the shelf in VST, we were able to sell for around $1 million. And there'll be a share dividend for VST shareholders as well. So that we're anticipating happening either in December or January. So just, hot off the press, you can anticipate, I think within those, there'll be a share dividend to VST shareholders for those two companies going public, which again, there was no value on VST's balance sheet, but we were able to, again, because there is value in the IP we have, convert it into, roughly $4 million for VST. Plausible is another example of that too. We've been in that pet health category for a while, but it's something that was built within the year where we really pushed on this. It's something Alex and I have been working on for the last year, but leveraging the distribution we have within Hydrate's bricks and mortar, its D2C, its entire ecosystem allowed for us to build something from scratch in VST where we've been able to build equity, but with no risk and now a potential for to be an outlier in our portfolio. The other ones where they say incubating, you'll see that we've got some projects that we're incubating in the men's health, women's health, and nursing space. Specifically in the men's and women's health, it makes sense given that VSDH1 is powering direct-to-consumer healthcare on the US side. We're getting a chance to see these categories, well, whether it was TRT, which is something that we've been looking at for years, HRT on the women's side, other types of peptide treatments. Like there's a lot of movement in the longevity and anti-aging space that we see that given the fact that from a VST perspective, we have access to a 50 state medical network, pharmacy, at-home care if we need to from a nurse perspective, all the compliance. It makes sense for VST to look at projects that can be cash flowing immediately. So when we look at the men's and women's category there, they're businesses that we're toying around in those two categories that benefit Hydrate because again, it plugs into that ecosystem, which also benefits VST, but we're in theory double dipping because it's being incubated from within VST. On the nursing category, um, you know, a lot of you don't remember, like VST acquired 100% of Hydrate in the beginning of 2021, and at that time, like yes, we believed in the bricks and mortar, and we believed in the D2C, which has tremendous opportunity. But I still love the ability and the opportunities within that nursing at home care sector and space. There's 4.5 million registered nurses in the U.S. Currently, roughly, I think 3,000 on the Hydrate platform. All organic. To me, that is a huge market opportunity. And Hydrate's focused on its growth, but through spending time and going deeper into that nursing category, I'm seeing other opportunities that, again, we don't want to take the focus from Hydrate away. It's something that we're able to do on the VST side, which benefits Hydrate and its ecosystem. But again, an ability for VST to build something where you've mitigated the risk and downside risk exposure, and you're building a solution for a pain point that exists, and you have distribution for it. It's kind of it's the best recipe to build winners. So that would be around the nursing stuff. And so I think you'll hear a lot about those types of businesses in 2026. Uh, Cybersecurity, again, it's a sector that we're in. So there's a business in there that we've been working on and piloting it. And I think we're going to focus it on the healthcare space. It makes sense. We were building it initially within the Web3 ecosystem, but given the fact that we're in the US and in healthcare and data privacy is so important, we're going to be piloting that cybersecurity product in that category. Payments is something we've been in fintech, incubating Bank. It's a product that we've been beta testing for a while now. It's around banking infrastructure and payment options within the OnlyFans category, more of the creator economy, but on the adult side, where chargebacks are high. Credit card, like billing expenses are expensive. It's still very hard for a lot of the creators in that ecosystem to get a bank account, to get a credit card, process payments. And so we've been working in that sector and space for a while. So we've got something there. And then you'll look at shells. So these are basically old VST investments where we took the IP, the businesses didn't really work out, but we have the ability to use them as shells for other public companies wanting to go public within those categories. So there's a value there for them. The total value of those residual IP and other holdings is roughly around 15 million. So if you total it, you're looking at around 171 million all in. I think Uh, the CSE has us at 100 million shares, roughly just under 1.1. Sorry, just under 101 million shares. So you're looking at a NAV price per share of around $1.69 there. So um, my hope with uh, this webinar and this exercise is to, on a quarterly basis, go through this again. So everyone that's looked at this, we can now go through the companies, see what the valuation changes would be. So again, like we'll have the valuation as at October 8th, 2025. And if we do this next quarter, as all of us collectively as a group can look to see the difference in change, if it went down or up, and kind of go into details as to why. Uh, and now in a lot of cases, when you look at these businesses, especially the private or incubating, that's their conservative value today. So when we look towards tomorrow, like our goal isn't to just rest on hydrate or rest on the laurels. We want to double, triple down on that business because we feel like we have a huge first mover advantage for considerable growth. But don't get it twisted. We've got a lot of other things that are brewing that that are that we want to leverage the momentum on that. And they say rising tides lift all boats. And so, given how well Hydrate and VST have performed from a share price perspective over the last, I would say, 12 months, it's now allowed investors are now starting to look to see what else do we have under the hood, which again we want to be able to leverage and get those businesses and projects which we feel will complement what we're doing. So specifically with the healthcare category, like an Insu, funded as well, to be able to have those shots out there for VST and VST shareholders. So I apologize if I sound a bit nasally. I've been under the weather. I've been fighting a bit of a flu, so sorry if I sound a bit off today. Okay, I'm going to give me 1 second here now. So, uh, the summary of all of that is when you put all of that together, you've got roughly 120 million in public companies, 38 million in private, 15 million in new ventures, with the NAV sitting around 170 million. As a refresher, that went from 4 million in 2017 to around 170 million today. So that's a 4,000% climb. Um, and VST has no debt, and we have full insider alignment. So, in our eyes, this is what disciplined venture building looks like. Execution over excitement, results over rhetoric. Uh, for those of you who follow the story, I mean, I think this is where the opportunity has been very clear. Is the discount to NAV. Our market cap today is 85 million. What's interesting is last year around this time, in September, actually not in October, in September, I think we were around 16 million. So, we were at almost an 80% discount to NAV at that time. The NAV was obviously lower then, but our market cap is 85 million, our NAV is 170. So it's still a 50% discount to our NAV. So for every dollar of value we own, the market is pricing us at about 50 cents. To me, that's not a problem though, that's potential. And as we keep disclosing the NAV quarterly and highlighting portfolio performance, we believe the gap will close. The companies leading the charge, as all of you know, Hydrate, the Shopify for healthcare. It's fast growing, it's profitable, it's scaling nationwide. The company's received accolades from Deloitte, EY, the Financial Times. I don't want to beat a dead horse. There's so much momentum there. There's so much room for growth. So, you know, I know that Hydrate represents a big part of our NAV and a big part of our public NAV holdings. But for those of you that follow the story, they're just in the first inning. So as they grow, our NAV grows with them. And so we're excited not just at where we sit today, but we feel that not only are we a discount at what we trade at today, but we believe that there's so much room for growth as Hydrate grows and closes out Q4. And then, 2026, for those of you that follow the story, is going to be as Shane says, fireworks. Insu Therapeutics, this is exciting. It's tackling diabetes through oral insulin, one of the largest global health opportunities. This is one of those businesses where, you know, we have nothing to risk. VST's cost on that investment was negligible. The opportunity that we have being part of a company with that's got a patent pending or a pending patent on oral delivery of insulin and other injectables with such a massive market, that's one of those businesses that could be, those moonshots. It's that, Peter Thiel talks about the zero to one infinity type of businesses, which, we have an opportunity to be part of. So to me, that's an exciting, a very exciting business. Plausible, both the ventures in the studio. Again, the pet market is huge. Uh, there's no there's so much room for innovation. I think most investors or most entrepreneurs really focused on the human side of healthcare, which is obviously important, but we feel that there's huge opportunities by being a leader in that category. Having someone like Alex Chang and his relationships there, I think put us in a huge advantage. Having the capital now and then the distribution, like we really pushed the the foot on the pedal on the gas, sorry, with Possible because within Hydrate's ecosystem, we've got end patients within their business that 68% own pets, and those patients are spending money on their own health and wellness and would spend the same amount on their pets. We've got bricks and mortar distribution all throughout the US. Again, if we wanted to introduce a product on the consumer facing side, we've got a D2C business that is growing all throughout the US. Again, people coming in for health and wellness for themselves, 68% of whom own pets. So distribution already lined up. Then we've got nurses, physicians, pharmacies that can um, uh, you know, compound uh, animal supplements and prescriptions. And so it's not only a huge category, but we've got all of these advantages that we have at our side. So these are all category defining opportunities, and they're all inside your VST share. Uh, Now, the next before we get to questions, kind of like that, just touching on the next wave of growth. While Hydrate continues to have massive upside over the next 12 to 36 months, with strong revenue growth, expanding margins, and national visibility, our focus is also on building the next outlier inside the VST portfolio. And we've done this before, so I want to touch upon one other thing. When in the past, when our share price is traded at a premium, we've used that premium to acquire and onboard disruptive projects, whether it was in 2018, and Copilot's an example of that, or in 2021 with Hydrate. VST acquired Hydrate for $1.6 million in an all-stock transaction when VST shares were trading, I think, around 70 cents. And we did the same thing with Stardust Solar as well. And so, we've used that playbook where when our share price is trading at a premium, uh, we're also able to be aggressive and add value and assets without having to use cash. Now, some may say, okay, well, you're issuing shares. Well, the idea there, when you look at VST's shareholdings, I mentioned insiders and management might own up to 20%, but there's another 15, 20, maybe even as high as 25% of VST shares are owned by within the ecosystem by our CEOs of our portfolio companies, like Shane Madden, for example, is a VST shareholder, or others within our portfolio. So when we're using shares to acquire, we want to make sure that asset is very valuable and we're buying it at a good price, and we think that there's tremendous room to grow it. But we also want to make sure that that share goes into the hand of someone that is also bought into the VST ecosystem. And so just to know, when we do that, we're not giving it away to someone that wants to necessarily trade the stock. We're giving it to someone that we've now partnered up with. We almost married to like build together. And so having them own equity in us and VST is very important to us because they're motivated not only to build their own business, but to also add value to the portfolio companies as well, because they know they benefit if that happens. And again, that's the core of our model, using strength to build strength. When the portfolio performs, we deploy that momentum into the next generation of winners. So for those of you that are new, why look at VST now? Well, because it gives you something rare, a diversified venture portfolio at half its value with no lockups and full transparency, because management's aligned. We own the same shares you do. Uh, because our ecosystem is a proven flywheel, we build, scale, and spin out winners. And because the timing is right, early stage tech is back, and VST is the bridge between public markets and the innovation economy. Looking ahead, our focus is clear. We want our primarily grow hydrate. It's the trailblazer at this point, and I've said to others, we are tripling, quadrupling down, quintupling down on hydrate because uh, it's got that first mover advantage to really be that special business, and not just us saying it. The momentum is there, the tailwind is behind it. The and everything else we look at, whether it's Insu and Possible, and turning them into category leaders, also plugs back into giving Hydrate additional advantages, and pushing revenue opportunities for that winner as well. I mentioned earlier, we also want to spin out new digital health um, businesses that are cash flow generating. When I mentioned the incubating in the nursing, men's health, and women's health category, and then the spin outs in the fact that Hypertrust and Yocal, Hypertrust via plan of arrangement, and Yocal via share dividend, will be listed, I would say, within the next 4 to 5 months. And we want to execute on that and be able to deliver shares to VST shareholders and see how that goes. Like, see what happens. We can track to see how our shareholders respond. Are they respectful for the companies, or are they just dumping their shares? Now, again, our shareholders are privy to do whatever they want, but it's an example of us just to try the share dividend again, to see that it's a positive for our portfolio companies, and not a negative. We want to keep expanding our NAV through value creation, and we want to keep educating and engaging our investor community. For those of you that have followed the story, for the last 2 years or 3 years, VST has been able to, because we operate Hydrate, we've been able to go to conferences and meet new investors, both on the institutional and retail side, connect with analysts, because of Hydrate, but with no cost to VST, all tying back to and getting VST in front of those investors as well. And so we've been at no cost. So we've really been able to get new investors, new blood into the VST shares. Uh, uh, you know, uh, Reward and celebrate our shareholders that have been patient through those dark dark years. But we will continue to leverage our portfolio companies to get in front of new investors, whether it be Hypertrust in the Web3, Yocal in the AI space, Hydrate in health, or Possible in animal health. Again, everything ties back to VST. So, to wrap up before we get to questions, Victory Square is about access, alignment, and possibility, from 4 million to 170 million in NAV, no debt, a clear path forward. We've proven the model, and now we're scaling it. Every investor deserves a chance to own a piece of the next generation of innovation, and that's exactly what VST was built for. This is our next chapter, and we're just getting started. So let's open it up for questions. Okay. Sorry, guys, I just need to take a sip here. Okay. So how is a 49% stake in Possible worth 3 million if they launched a $10 million fund? So what we did in Possible VC and Possible Studios. So in the case of Possible VC, uh, we had a valuation set before the capital was raised. Now, because we were not blindly raising money from scratch. In the VC fund itself, we had investments that we incubated and built from scratch with Alex. But we also set a valuation, adding the fact that we're bringing distribution, access to pharmacy, and some other really key advantages. So we brought that capital in at a valuation. We didn't bring it in at zero. So in addition to having equity as the GP in that, we also have carry on the performance of it. Hi, Shafin. From an industry target perspective, what percentage of NAV do you think is fair value? Example, if NAV is 200 million, 80% is 160 and translates to 1.6 for BSC share. Um, so I think from my experience, uh, public companies like VSTs have always traded at a discount to NAV. Um, and they're because they're generally looked at as a holding company. The one difference with VST is we build from scratch as well. So we're not just a holding company. You know, it's always been a tougher business to for investors to understand because there's so many uh, businesses and so many moving parts. Financials can be messy because there's a lot of consolidation, and then accounting method, for example, IFRS doesn't account for the fair market value of some of our assets because they use different accounting treatments to value things. As an example, when you look at Copilot, they don't value Copilot based on its last financing. They value it where they discount it every year from what our investment is, which is super weird, but I guess it's just the accounting method. So I think uh, from a public markets perspective, businesses like VSTs or let's say call them in the holding company category, which we're not, but that's the category we kind of get grouped into, always traded a discount to NAV. And in the past, we've traded a significant discount to NAV. I think I've seen 15-20% discounts to NAV being something that would be there. One other part to that though is that in addition to just being, let's say, having that holding aspect to it, because we do hold equity in investments, is the fact that we build from scratch. So, like in the case of Hydrate, some of the IP that we build has the ability to have a significant multiple or grow even more significantly. So, I think that's the thing that it's hard to explain to investors, but that to me is like the X factor for those that do understand the business and the story will realize that apart from the discount to NAV, which 15-20% discounts to NAVs are generally normal, there's another X factor element here that if that X factor hits, it's exponential, like in the case of a hydrate. The majority of hydrates value is likely from VSDH1 based on market reactions. Given that value is over 80% of hydrate and VSD has a 10% royalty, wouldn't that value be at least 1/9 of the 80% of hydrate's market cap? That is true. Like again, I think in the notes we mentioned that it'll be re-rated. But we want to be very careful in how we re-rate it. We'd rather, uh, it'd be not be re-rated by a third party, just be given that it's like a wholly owned sub. Excuse me. And so I think that the best thing, and what they would do is they would evaluate two elements. So they would evaluate the value of the royalty on an ongoing basis, because again, like yes, Q4 as all of you that are following the story, like Q4 is going to be a big quarter for high. Q3 was big. High Q4 is going to be bigger, and 2026 is going to be, as Shane mentioned, like his reference is you haven't seen growth yet. Uh, so I think that valuation will be re-rated. But the beautiful thing of VSDH is that it's sitting on a lot of stuff in there in the healthcare category that we continue to build and improve on that like are being used in Insu, are being used in Possible. Um, which again, we were able to take that IP and put it into Hydrate, and give it to Hydrate because Hydrate had traction into that category. So I do think it'll be re-rated, but I would rather the third party do that at the end of the year. Uh, Futura Health is USA based, so why not merge it into Hydrate? Um, Futura has kind of been stalled. So we that was another that became a portfolio company because VST put IP in there. We used to have a D2C, VST had a D2C company called Discrete Care, which again was in the sensitive issue space. This was in 2020. Um, and we put that into, we got equity in Futura via that. I think that business is kind of like stalled for a bit, and so I don't know if there's any sort of direct fit into Hydrate. One thing to note too is with Hydrate, we have to be very respectful that the third vertical, the D2C vertical, which is blown up in a good way, meaning like blown up in a lot of growth. Uh, we have D2C brands licensing from us, so we, from a Hydrate perspective, like it would, they can't really get into the D2C space and directly compete with with their customers and clients that are kind of like onboarding their patients. But VST can invest into that category. Hydrate can't really, so it's we want to keep that Hydrate to have that church and state divided. VST Health, you own 20%. They're a lab in Brazil, so why not unload? Brazil health is nothing like USA, so hydrate model will not work. Yes, that's correct. We do own equity in the lab in Brazil, Safe Test Diagnosticos. Um, we don't want to unload it. Again, like healthcare for us in the US is our primary focus with hydrate. But again, we don't want to. I know I'm going to get a shareholder that's going to like make a comment about this, but we don't only want to stay where the puck is. We want to go where the puck we think his puck's going to be. When you look at South America, so we're focused in Brazil right now, which is Portuguese, and then you've got about 550 million Spanish-speaking South Americans outside of Brazil. Uh, Huge category for us. The having a distribution to pharmacies, having a lab, having relationships with Anvisa, which is the equivalent of the FDA in Brazil, having manufacturing partners there, having boots on the ground, um, you know, similar pain points. So, yes, healthcare in Brazil is different than healthcare in the US, but healthcare is healthcare. So but because we've already navigated in that sector and space for over 5 years, and also to note, VSH, some of the healthcare they've already been they started in animal health, like bovine health. So they started with vaccines and treatments around that, and then expanded into the human health side as well. There's a lot of really interesting IP sitting there around like AI automation tools that are being used for breast cancer detection that are being applied in Brazil that are government funded right now. So I think there's a lot there that investors probably don't know about because we haven't really talked about it, but it is a note. We'll probably get the team there on a webinar, I would say, over the next 3 months, because there is huge things happening, and so we don't want to unload it. We think that there's tremendous opportunity there. Oh, I want to just touch upon VSH as well, because so a lot of people will remember and that in 2020, just to note, VSH and Safe Test were the ones that had that rapid antibody test in Brazil that we helped them get FDA approval on the US side. And so, through that, they were able to, this is how they were able to, you know, develop the relationship with Anvisa, uh, bootstrap other products and services within the category that they've been testing, secure manufacturing and secure distribution. So there are a lot of elements there that they have kind of in queue. Uh, Now, one thing, there was a company at the time, I think it was called, oh my God, Sora. Oh, damn it! It was another company. If you look at that company, uh, I think their market cap is around 50 or 60 million Canadian. They're trading right now. Uh, VSH is much stronger than that company as it exists, just with some of the IP there, because that company was looking to have VSH run some of its as have other publicly traded companies in North America have hired VSH to run, and SafeTest, sorry, to run some of their lab work and some of their testing work, just again because the infrastructure there is set up and it's much more reasonable and cheaper to do. So, hi Shafin, what are your thoughts to get more exposure for VST? Do you think this will happen organically as the portfolio grows? I think the VST daily volume is quite low, and I'm wondering if this is why there's a lot of volatility with minimal shares traded. Um, we've gotten a lot of exposure kind of organically by via hydrate. I think that's where all of the interest has come. And what we found in the past is usually a portfolio company's performance leads back to VST. We've seen that over time, and so I think it's going to be the portfolio that really brings attention to VST. For us, we've never really been able to control the share price. We've seen the share price go up and come down and go up and come down and go up. And but what we've been able to, we kind of focus on the variables that we have control over. We don't want to start spending money on marketing and promo and those things because again, we don't know what that's going to result in. And we feel like every dollar we use internally is going to build something that's going to have huge potential. Now, it might not have it today, but in a year from now or 2 years from now, the fact that we're investing internally into these things lines us up with the next, hydrate or the next type of businesses. So I think in the past, we've noticed that it's been our portfolios that have brought eyes and attention to VST. And I think that's going to most likely continue to be the case. And on the hydrate side, like we think the next 12 to 36 months, there's just tremendous growth ahead of it. All of that is going to port back into VST. So while our volume might be low now, our volume is better than it was, let's say, a year ago. Our share price is better than it was a year ago. And so for us, just I think brick by brick, just like continuing to move forward, but focus on the variables we can control, which is just execution of the business. Is Copilot AI the same Copilot that Microsoft is using? No. Copilot AI, Copilot Advisors was around before Microsoft had that product, but no, it's a different Copilot. Can you reiterate the dividend timing again for upcoming listings? So there's a portfolio company in the incubation category called Hypertrust. Uh, we're going to list them via plan of arrangement. I think the timing is going to be the end of January of next year. That's the plan. Plans can change, but that's a plan. And as part of that plan arrangement, there would be shares in that would be distributed to VST shareholders. And I believe it would be you would receive shares based upon the proportion of VST shares you have. The second is Yocal.ai. So VST sold an asset to them. They're going to go public via direct listing, but the way they're going to list is that VST is going to take some of the equity we have in there and give a share dividend to our shareholders, and that'll meet the qualification for their 200 plus shareholders that would allow them to list. That, from what they've told me, they're anticipating that happening before the end of the year, but it could push into January. So those would be the two. What sectors are you primarily excited about or focusing on going into 2026? So I would say like our main focus is hydrate. We want to, you know, uh, execute on the plan for 2025. And then in 2026, like the onboarding of the additional licensees that are in queue is going to be very key. Um, Improving the margins, the gross margins, because our fixed cost stay the same. So just to know, next year going from a hydrate perspective, our gross margins will jump by about 10%. Our fixed costs are going to stay flat, and we obviously know the plan is to double the revenue again with the new licensees in queue, and really focus on increasing the LTV by additional products, down that line. So that is our primary focus. Now, second to that, it's going to be really healthcare, which is Insu, starting with Insu and XRI. So XRI, we're hoping to get trading soon, and there's interesting IP there that's in the health and wellness sector and space as well. And then Possible really pushing the studio element of that. So we've already started working on like Alex Chang. I don't know if I'm gonna hope to have him on a webinar, but this guy is a beast. Like he's evaluated over 50 not only is he connected in the sector, but he's evaluated over 50 companies. Now, these are companies that are like directly tied into like what we are looking for, like diagnostic testing. So as an example, like Hydrate has a product that humans can take and it'll identify biomarkers, and then we can suggest supplements or health and wellness products and services that can help you prevent or offset some of those, let's say, issues that you might have, you know, later on in life. It's the same type of work that we can do for pets. And so Alex has gone and found exact companies that like plug into our ecosystem. So we have an amazing uh, business, some that are actually driving revenue too, that are like such direct tie-in and fit in. So like I would say hydrate is going to be our number one focus into XRI on their health and wellness, and Possible is really, really for us, that is our focus for 2026 is just like go all in on this category. Now, having said that, for our shareholders, because we have IP that, like in the case of Hypertrust, so me personally, like I love the Web3 space. I've been in Anyone Knows Me since 2012. I've been early, but I don't want it to take any of VST's resources or time. So we just want to again have that do a plan of arrangement, give our shareholders some shares in it. Same thing with the Yocal project, but I think health is going to be where we really focus on because I think that's where we're going to get the maximum bang for VST. Do you agree that VST shares are not trading at a premium and are a discount currently? Yes, I mean, so based on the NAV doc I just shared with you, I believe we're still trading at a, I'd say a 50% discount to NAV, and that's today, right? So if you believe Hydrate's going to grow or hit a higher price target, well, then we know that there's also room where the value of VST will go up. However, like I think my goal is to share that with you, shareholders, and continue to do it on a quarterly basis. But at the end of the day, we know it's just going to be what we can control is just we just have to focus on execution. If we execute and the results are there, then you know I think it'll catch up and shareholders will feel more confident. And VST, like we're not in a hurry, so we're not going anywhere. I'm not selling shares. So I believe that again, if what we can control is heads down, execute, and if we do that, then the rest will do well. Uh, can you explain the biz model of Plausible Ventures? Is it a telemedicine platform for vets? No, so there's Plausible VC and Plausible Studios. The Plausible VC is again investing in the animal health category. It's a seed fund. So as an example, Alex was part of when Alex Chang started Vetsy.ai. He had built an AI tool for vet clinics. So he did build a telemedicine platform for vets, and this was in 2018. That was his first business, which he exited. He was part of an incubator called Leap, which is run by Mars, which is one of the largest pet health companies. And he had a relationship with Merck Animal Hospital sourcing data. He did that. He knows that category. That category is very, very uh, uh, competitive now. There's lots of players, cluttered space. What he's looked at is he's looked at all of the other categories that are underserved, but specifically categories that we feel like can plug into our ecosystem. So like meds, supplements, anything with pet meds, pet supplements is where the VC is kind of looking into investing. Insurance, another category. Uh, At-home vet care is another category. So these, and then also other types of diagnostic tools that have not been kind of cluttered yet. They've also got some D2C type of IP and apps that Alex has been focused on. So the VC has got more of a broader category, and they're also looking like one of the relationships with Leap is that Leap is now looking for companies that are further along. So they're sending a bunch of IP along Alex's way so he can look at it first. But again, finding complementary businesses and businesses first that can plug into our ecosystem. On the studio side, we're building a lot of that in-house. So, as we, in addition to like, looking to acquire, we're also looking to like build IP from scratch in-house. Any plans to take Hydrate to the Nasdaq? Yeah, that's the plan. I mean, I think the Hydrate is a 100% US business. Our doctors, our pharmacies, our nurses, our bricks and mortar, our patients, all of our revenues are there. And so, obviously the plan would be to go to NASDAQ, especially when you look at like HIMS trades at, I think, 76 times adjusted earnings. The average multiple in our categories are around 46 to 50 times. So multiple wise, in this category, tremendous room if we were to make that transition. And that, as Shane has said, that plan is in the works. Are there any other big conferences coming up? VST will get more exposure. Uh, we're going to be at Planet Microcap in Toronto, which is being in conjunction with Microcap Club. Not next week, but the week after in Toronto. I think it's October 21st, 22nd. So we'll be there. And I was just in Muskoka for CEM representing Hydrate. And again, VST comes up in every conversation. So, uh, the next one will be Planet Microcap in conjunction with um, Microcap Club. Sona Nanotech, that's right. Sona was the one I was referring to, which again, like, is very comparative to Safe Test or VSH. But you'll look, VSH, we have a $1.4 million valuation on it. Whether you look, the IP in there is very similar to Sona. Sona's at a 60 million dollar market cap. So again, just the conservative idea of like there is IP sitting there that has higher value. Hi, Shafin. I understand that VRAI has halted. Any idea on timing to when it'll be trading again? So I am actively uh, on that file now, and you'll see some news come out on that soon. Uh, my goal is to have it trading within the next month, like within the next 30 days, but like not just like blind, like there's going to be movement. I've got agreements in place to like I'm stepping in to get the audited financials filed, the Q1 and Q2s filed. They have to, there's a continuous disclosure review, getting that completed, getting all the debt consolidated. I'm on that, and I would say stay tuned for more news, but like that should like I think it should be trading within the next 30 days. Can VST shareholders meet you in Toronto? Absolutely. On the Discord chat, I'll share. So Shane, Vahid, and I will all be there in Toronto, and so I'll share There's going to be a live presentation at the conference, and then there's going to be a full day of one-on-ones. So if anyone's in town, I'll share what our schedule is going to be like and what the availabilities are, and would love to meet anyone that is in Toronto. And I'll share those details on the Discord channel. Um, that's all the questions. I think that's all the questions. Oh, sorry. That's not all the questions. That was all the questions in the webinar chat. Sorry, there's another. I'm gonna try to get to as many of these. I have a hard stop at 12:15, but I just noticed there's another question and answer area here. So, uh, one question I had on Nurse is if their pharmacy network partners are sourcing their GLP-1s overseas. I ask because Trump wants to put a 100% tariff on all main brand medication. The gray market GLPs may or may not be spared. Um, no. So one thing, so in pharmacy, there's what's called an API, but it's a active pharmaceutical ingredient. The active pharmaceutical ingredient in all GLP-1s comes from China. That's for everything. So I think that would be the only thing, but I know that from what Shane has mentioned, because that question got asked, that has not been included in any sort of tariff conversations. But apart from that, I think everything else we do from a GLP-1 perspective is personalized and it's done in the United States. At what price would you consider the stock is fair value and stop a buyback? I think so. Just to share, the purpose of the buyback is kind of a tool from a both offensive and defensive perspective, uh, and it's a tool to have in place. And so the first part of that was to be able to use to set floors to protect the stock. Right. Again, we still believe that right now, VST stock in the last year has gone from, 8.5 or 9 cents to, I don't know what it's trading at today, maybe 84 cents, 83 cents. Uh, and the stock it's sat in a flat level for a couple of years. So what we expect happening right now is just turnover, right? Like there's people that may have been in the stock, there's people that are taking money that jumped into the stock, are taking money off the table, all natural things that are all natural to happen. We don't want to panic and jump at any sort of conclusions of anything else other than like natural turnover. So our first plan right now with the buyback was set floors, right? So just set floors, which we've set. The second thing is going to be to monitor progress as we go along. So a couple of things. One, we have things in the hopper that are going to be released, and where if we have dollars, we also want to be very specific. If we feel like there's some things that we can use for that can get us like a significant multiple kind of return. So we don't want to go all in on buyback. Like it's part of a tool that we're using right now. Now, the second thing is at the end of this year, when we assess, let's say, liquidity on maybe some of our non-core holdings, or we look at, what royalty payments might come back, we might get a bit more aggressive on the buyback if we're still sitting at these levels, let's say after all of that. So from a so the question of stop a buyback, I don't know. I think we've set it for a year, and we're going to use this tool to be offensive and defensive at the same time, depending on circumstance. But it's not something we're like rushing into. We don't feel an urgency where like the stock needs to be at this level. Like for us, it's we've had a huge movement. There's going to be people turning over, and it's great for current shareholders in the long term. If there's a turnover, there's a new cost base set, which helps us with new floors being set. Because again, there was a like a very rapid jump. So, uh, hi, Shafin, can you give an update for VST to depart the CSE? Wondering if you think this will be important to attract other investors. We looked at this in the past. Like we looked in 20, I think it was 2020. We were thinking about a move to the TSX, and then the markets kind of turned, and we just said, okay, listen, let's just focus on the like all markets, microcap markets were down. We're like, let's just focus on what we can control, which is build. And we did that. So the idea of the exchange for VST, it's not been a primary focus now. Like Hydrate's going to be the first to get, to go over to the Nasdaq, and I think once that happens, I think we'll reassess it for VST. But for now, we've really been just focused on like cleaning up. 2025 was about cleaning up the balance sheet, which we did, no debt. Increasing the value of our share price, right, which we have. And the third was, generating internal cash flow, right? Which is where is in play too as well. So I think that the exchange thing might the revisit of that exchange might be a 2026 thing. Any chance the debt to nurse.v around 750 will be called early to put hands into VST to help fund our initiatives as Nurse just did a financing? Yeah, I mean, we just to know we led that financing, we secured it for them. So just know like Nurse and VST are like, like we're fam, right? So for those of you that follow the story, we only spun Nurse out of VST, not because we wanted to or it wasn't a focus, it was because VST was trading at like 9 cents and getting zero value on our books for Hydrate. And we wanted Hydrate to be able to attract new investors that were maybe digital health focused, which wouldn't have found Hydrate because of being underneath VST. So that's 750. Like, we could pull it any time if we need it. There's not really a huge necessity for it. VST is sitting on some cash right now. We've got no debt. We anticipate royalty payments coming in. And so I mean, if we wanted to call it, we could, but it hasn't really been something that we've needed to do it. But at any given time, if we want it, we can get it. Um, is Covalent and Flota R&D the same company? Covalent, so Flota R&D was like the name of the the development company, and then there was like the token, which was CQT, which is now CXT. So they're separate. Uh, what's going to happen with VRAI? Is something going into it? When will it start trading again? And can you tell us about the plan that's going to, please? VRA, I can tell you right now, for me, it's a primary focus because VST has a lot of equity in it. I'm actively involved in that business now to get this thing back up trading. I am bullish about what IP sits in there, and I'm confident that, again, 12 months from now, or sorry, 4 months from now, we will be looking at that asset and be excited. I'm unable to find any information on Futura. Can you share a website? I'll find it again. That's an asset we sold IP to. We're not involved in that business at all. We've kind of marked it down, but I can find some info and share that on the Discord chat. Are you willing to share the holdings you're looking to sell off? I think, to be honest with you, I don't think that's a good idea for me to do. Just again, we don't want to be negative towards anyone, and it's something we're assessing. Really, like for us, I mentioned like our focus is really, really health. There are some holdings that we've had for long periods of time that we're non-core. We're not even like really, we don't really communicate with the teams and we evaluate them. But I think for those, it's just better off to get them off the balance sheet and then allocate that time and capital somewhere else. Uh, Kin Biosciences website domain has expired and no further info available. Yeah, so I think that the name has changed again. Uh, I will get that information updated. It's a minor holding, so we haven't again been. It's one of those non-core holdings, but the third party evaluated and had it in our book, so we just kept it on there. But I'll find out what the updated information on that is. I don't remember seeing Creator X in MD&A. So there are a lot of there's a lot of IP here that's not going to be on the MD&A, just because again it's incubated IP or intangibles. So a lot of times, like the asset that was, there's assets that sit on our balance sheet that don't even show up, that are just IP that don't make it out there. And so in the case of Creator X, this was a platform that was built. So we had a company in our portfolio called Creator.co, which was a marketplace for creators, and we're in it. We built a platform there, focused on the Web3 space that we own, that sat, the IP still sits there. And again, we've ran pilots on it because we keep this stuff live. We just haven't had the time and resources to like focus on it. But yeah, there are companies that would not show up in the MD&A. For the hype dividend, can VST sell the shares and issue out a cash dividend? This would stop people from buying VST, get the dividend with a zero cost base and putting selling pressure on the stock. Or how would you avoid this but still give VST shareholders the benefit of the dividend? We actually structured it to give it to VST shareholders, so that Hypertrust could do a direct listing. And this is a phenomenal team. And anyone, like, I'm going to share things about this particular chain. This is one, like, next to, let's say, like Bitcoin and ETH, that I think is extremely, or maybe Sol, that's extremely exciting. But I want to we wanted to give the share distribution to our shareholders because we want to try it out, right? We want to see it again, given that our biggest holding right now, in the case of Hydrate, we know that a lot of VST shareholders own both. So this is something that we want to explore. Like, if when Hydrate goes to the NASDAQ, we want to explore all optionalities, and that are in the best interest of VST shareholders, especially if we get asked questions about share dividends. So we want to try it, and in both cases, we've structured it so that that's part of the process of listing. Outside of Hydrate and VS Health, what are your five core holdings you're concentrating on? So, Hydrate's number one. Insu Plausible is a big focus. VSDH is a big focus. Really, everything around the healthcare category, and XRI. I would say, like, for us, Hydrate, Insu, and Plausible are, like, would be the three. Apart from that, XRI is key, and then some of the health IP that we're incubating. This is really where we're spending our time, where we feel like we're going to get the best alpha, where we have some core advantages, right? Like in the case of Hydrate, we've got distribution compliance, a compliance mode. With Insu, we've got the patent. With Plausible, we're plugging into, again, like, all of the advantages we have. So yeah, I would say that those are the core that we're really kind of spending our time on right now. Do you plan to have more interviews with leaders of various companies, Hydrate, Plausible, Insu, and so on? Absolutely. So one of the things we hope to kick off is getting a webinar immediately with, so there'll be one with Shane, very soon. Alex, for sure, Chang from Plausible, and Ahmad and Anu from Insu, I would say, are the next three that I would expect. And my goal is to get these interviews out within the next, I would say, 30 to 45 days. Maybe, like, we try to set up a webinar every 2 weeks with one of those three. Uh, are you considering taking any of the private companies public? Yeah, so uh, I'm gonna have to wrap up for this next question, guys. Sorry, I just realized I had a hard stop at 12:15, but yes, so Hypertrust Yocal will be listed, and I think the next one that we might look at would be Copilot and VSH. I'm gonna try to do a rapid fire because I want to try to get to see if there's anything I haven't answered here. Do you have September numbers for Hydrate? I do, but they should be coming out shortly. I think Shane's going to drop them in the next week or two. Will Hydrate purchase their, it says 49% of the pharmacy, but it's 40? No. So we have the option 5 to 40. We have everything we need for 5. I don't think we'll exceed that. I think that option is there in case someone were to acquire Hydrate and they want that option. Hydrate is already a spin out and has its own management. So why is VST management focused on it? So it's a core holding. It's a consolidated holding. We operate it. So VST is a venture studio. We're not passive. All of our investments in those scenarios where they're core holdings, we're actively involved. So whether it's chairperson of the board, on the ops side, it's yeah. So it's like we're operating the business. We're like we co-founded it. Uh, where is the 10 million coming from for Poswell? So just to know, this is another important thing because this is how Insu and some of the, Yocal and some of these other IP came about. Uh, there is zero risk to VST. VST is not using any of its capital. I've personally funded it so that in addition to other investors that I brought into that fund for Alex, but the upside goes to will go to VST. As a new shareholder, apologies if I've answered before, but how can we access the Discord channel that you mentioned before? Um, if someone could share the Discord, so there's a link actually to the Discord channel on our website, I think at the bottom of the page. If someone could share the Discord link, I think on the forum site, maybe ceo.ca, I think that's where a lot of shareholders are. I think that's where you can find it. Who's pricing the NAV? So there's mark to market in the public holdings. So what the last stock was trading at, which would have been yesterday into market. Third party pricing agency, which takes illiquidity, like takes the illiquidity and adds a discount to that as well. And then there's some that are management reviewed, and then there's others where there's a term sheet. We take the last financing or last term sheet offered. How could investors get a hold of Matt Bailey and any idea where I might be able to find him? I would like to find him too. Uh, Matt, as last we know, is in Australia. And yeah, it's very hard for us to get answers, and that's one of the reasons why that whole process has been stalled. Um, so I think I got to everything there, everyone. If there's something that comes, like Abby mentioned, there'll be we'll post this webinar shortly as well. And if there's any additional questions, you can send it to me on the Discord channel, and I can get to them. And I'll try to actually send a summary on the Discord channel as well. Thank you, everyone, for tuning in. Go Jays! NHL season started as well, so exciting time. And yeah, anyone in Toronto, I will share my details for Shane, Vahid, and I. So anyone that wants to meet us, talk about VST portfolio companies, Hydrate, meet for coffee or drink, let us know. We'll be happy to see everyone. All right, cheers. Bye.